Let's be real. Buying a house these days feels like trying to solve a Rubik's Cube blindfolded, especially with student loans weighing you down. According to new 2025 mortgage data, over 60% of first-time buyers are carrying student debt, and most are making one critical mistake that's getting their applications denied left and right. But don't worry, I've got your back. After analyzing hundreds of successful approvals this year, I'm breaking down the exact formula lenders don't want you to know so you can finally get the keys to your dream home. Whether you've got $20,000 or $200,000 in student loans, these 2025 rule changes could be your ticket to homeownership. But you gotta act fast because the clock is ticking. These strategies are most effective before October, when the new FICO 10T scoring model takes effect. That's right, the game is changing, and I'm about to give you the playbook to win. We're diving deep into 3 powerful strategies that could add tens of thousands of dollars to your buying power practically overnight. So buckle up, smash that like button, and let's unlock your homeownership potential together. All right, guys, let's dive right into the first game changer, the payment paradox. Here's the shocking truth they don't tell you in those stuffy finance seminars. Your student loan balance doesn't matter nearly as much as you think it does. What matters most is your actual monthly payment, especially if you're on an income-driven repayment plan. Under the 2025 Fannie Mae guidelines, lenders are now required to use your actual payment amount when calculating your debt-to-income ratio, or DTI. This is huge. Let me give you an example. Sarah, a client of mine, had $150,000 in student loans but was on an income-driven repayment plan with a $0 monthly payment. In the past, lenders would have hammered her DTI, calculating it as if she were paying a whopping $1,500 a month towards her loans. But with the 2025 rules, her $0 payment became her secret weapon. This one change alone increased her buying power by a massive $175,000. That's not chump change, people. That's life-changing money. And the best part is, this isn't some loophole or a glitch in the system. It's the new reality for borrowers in 2025. So, if you're on an income-driven repayment plan and you're feeling discouraged by your student loan balance, don't be. Your low monthly payment could be the key to unlocking your dream home. If you want to know exactly how to calculate your qualifying payment and see how much house you can actually afford, drop a payment in the comments below, and I'll personally walk you through it. This is crucial information, guys. Don't let your student loans hold you back from achieving your homeownership dreams. We're just getting started, so stick around because the next strategy might just blow your mind. All right, now it's time to get a little bit controversial with our next strategy, the forbearance flip. Now, before you click away thinking this is some shady tactic, let me assure you this is 100% legal under the 2025 guidelines. It's all about understanding the rules of the game and using them to your advantage. Here's the deal. If you request a short strategic forbearance on your student loans, specifically a 3-month administrative forbearance, right before you apply for a mortgage, most lenders will completely exclude your student loans from your DTI calculation. That's right, it's like they magically disappear. Now there's a catch. You need to have a solid track record of on-time payments. We're talking at least 12 months of consistent on-time payments. This shows lenders that you're a responsible borrower who can handle their finances. And let me be crystal clear. This strategy is not about avoiding your student loan payments altogether. It's a temporary measure to give your DTI a boost and increase your buying power in the short term. You need to be absolutely certain that you can afford the payments once the forbearance period ends. I've personally reviewed cases where this one strategic move added over $100,000 to a buyer's budget, literally overnight. Imagine the possibilities. You could finally afford that extra bedroom, that bigger backyard, or even that dream kitchen you've been eyeing. But remember, this is a powerful tool, and it's important to use it responsibly. Talk to your loan officer, understand the terms of the forbearance, and make sure it aligns with your long-term financial goals. Don't just take my word for it. Do your research and make an informed decision. Up next, we're diving into a strategy that turns your biggest monthly expense into a secret weapon for building credit and boosting your mortgage approval odds. All right, let's talk about something that no one seems to tell you about renting in 2025. Your landlord might actually be your best-kept mortgage secret. That's right, you heard me correctly. New FHA policies are changing the game by allowing lenders to convert your rental history into equivalent mortgage credit. Think about it. You're already shelling out a huge chunk of your income every month for rent, so why not get some credit for it? Services like Piñata will even report your rent payments to all 3 credit bureaus for free. That's like getting free money, people. A simple notarized letter from your landlord, along with bank statements as proof of payment, works just as well. It's all about documenting your rental history and showing lenders that you're a reliable tenant. I've seen this strategy add a whopping 50+ points to credit scores in just 30 days. That's the difference between getting denied for a mortgage and getting pre-approved with a competitive interest rate. Imagine the possibilities. So if you've been consistently paying your rent on time, don't let this opportunity pass you by. Start building your credit history today and turn your rental payments into a powerful asset on your journey to homeownership. This is especially huge for those of you who are new to credit or have a limited credit history. Remember, every little bit counts when you're building a strong financial foundation. So there you have it, folks. 3 powerful strategies to help you navigate the ever-changing world of mortgages and finally achieve your dream of homeownership, even with student loans. Remember, knowledge is power, and the more you know about these 2025 rule changes, the better equipped you'll be to make informed decisions about your financial future. Now, I want to hear from you. Which of these strategies resonated with you the most? Are you ready to unlock your homeownership potential? Head down to the comments section and let me know. Comment IDR if you're on an income-driven repayment plan and want to learn more about maximizing your buying power. Comment rent if you've been consistently paying your rent on time and want to leverage your rental history to boost your credit score. And comment FICO if you're looking for personalized advice on improving your credit score and qualifying for the best mortgage rates. I'm committed to helping as many people as possible achieve their home ownership dreams, so I'll be personally responding to the first 50 comments with tailored advice and resources. And hey, if you found this video helpful, do me a favor and tag a friend or family member who needs to see this before these rules potentially change again. Let's spread the knowledge and empower each other to make smart financial decisions. Until next time, stay informed, stay proactive, and keep crushing your financial goals.